On the GJ, we're going to start with the monthly time frame. So on the monthly time frame, I have this order block. I also have this one and this one, and then I have this one. So we can notice that the price was consolidating in form of a descending channel, and then it broke above it, and then came to test this order block, right? It broke through an order block, right? It broke through this order block, came, retested it, and then it was rejected to the upside, where it is now on this order block. We can also say that it broke above this one also. Can you notice something interesting? This is a bull flag. You can notice that we have an order block here and we have a bull flag here. What an interesting scenario, right? So in this coming month, what we're expecting is that the price is maybe going to break above this bull flag, and then since it's inside an order block, we're expecting the price to be rejected and then maybe come to test again the level here, right, before breaking above it and mitigating that other order block, right, retest it again before moving to the upside to come to test 187.67. so this will be our targeted bullish move. Then in terms of the bearish move, this order block might provide strong supply, right, which would mean that the price is going to be rejected off this area, and then this would mean that our bullish flag will be broken, and we'll be expecting that the price is going to push to the downside, right, maybe come again to this order block before moving to the upside. So in terms of the bearish move, we're expecting that the price is going to come around the region of 134.70 or 127.470. So we have two targeted areas, 186.670, right, in terms of the bullish move, and 134.70 or 127.470 in terms of the bearish move. So in terms of bearish move, we're expecting the price to move up to this level, and if it's the bullish move, we're expecting the price to move to this level. On the weekly chart, we can notice that we have an accumulation that's forming here. We have a preliminary supply buying climax or automatic rally in the UT, right? So what we're expecting is that these schematics will continue. So what I want to see mainly is a sign of weakness, right, which is a break below this area, or a sign of strength, which would mean that this will in the end become a reaccumulation phase. So I'm waiting for the price to either break above here and then sustain that level, right, or break below here and then sustain this level before I determine whether the price is going to move to the upside or downside. In the first instance, we'll be expecting a bullish move, right? So in terms of the bullish move, I'm paying attention to this level. So if the price breaks above this level, pushes back, right, that would have formed now a sign of strength, and then this actually holds as a support level, I'll be expecting that the price is going to push to the upside, close above this, test it, and then make a huge push up to 186.690 or 195.90 at this zone. So this is the bullish move that I'll be expecting. Then in terms of the bearish move, using the same level, I'll be expecting that the price, once it reaches here, it's going to be rejected, and when it's rejected, I'll be targeting this 150.22 zone. Why? Because there is this order block, right? And from here, it's either the price will be pushed back, and that's where it might come and break this and form this sign of strength before pushing to the upside to the levels that we've just previously mentioned. Or now when this breaks below this low, we'll be expecting a sign of weakness, right, and maybe a pushback a bit before the price comes to break this low, right? And if it closes, and if it now breaks again that low, we'll be waiting for the price to reach 139.110. Why? At this order block here. So for the bearish move, we'll be targeting 139.110. And for the bullish move, we'll be targeting 190,590. And the other scenario obviously is that the price is going to continue consolidating within this zone. Now we move on to the daily chart. So now I'm paying attention to these zones, right? And this one also, and this one, and this one, right? So you can notice this is our UTD, right? On the monthly chart we had this level, which is our highest level at this point. So what I'm expecting is that on the daily, since you can notice that we had a hanging man and then a bullish piercing move here, I'll be expecting probably the price might maybe continue the pushback, right, and then be rejected from this order block, come break this high, right, maybe 158,900, then push back to retest the previous high as a resistance level before moving to the upside, right? So this is the bullish move, the first bullish move that we'll be expecting. And obviously we can expect that the price may retrace maybe as far as this order block or to this one or this one. So whichever order block will it retrace from, we still be expecting the price to move to the upside, maybe come break this, then push back to test it before moving to the upside, unless the weekly structure then forms maybe a bearish engulf, forming a double top, right, with this. And also we experience that sign of weakness around this area. That's where we'll be expecting the price to move to the downside. So in such a case, what it would mean is that the price is going to mitigate all these, right, and also close below this previous low, right, come back and test the previous low as a resistance zone before pushing to the downside. And we'll be expecting the price to come around this 139,400 zone, where we have these order blocks here, especially this one. Right, so these are the movements that we'll be expecting on the GJ. This is just a preparation that I'm making, right, because I target larger moves. I target moves for about maybe 5% or so. So this is the perspective from which I'm looking at things. You, on the other hand, might say maybe the bearish move is the one that's prevalent to you because you maybe take shorter trades and then someone, so it differs. And also we make that provision that we are wrong, right? Hence the use of risk management. Having said that, thanks a lot guys for joining me. I really appreciate the support. Thanks for the comments, the likes, the continued subscription. So just a thought-provoking question, right? I hope to be generating these as we will be going. In these 52 weeks that are going to come, your trading results are going to come in two ways, right? Number one, what's going to happen is that you are going to be winning 1,000 every week, right? Let's say it's guaranteed every week, except for 1 week where you're going to lose 60,000. The second option now is you're going to be losing $500 every week. And then there is going to be one week where you're going to earn 40,000. Which method are you going to opt for? Yes. So I want you to give you the first answer that came into your mind before doing the calculation, and the answer that you're going to have after doing the calculation. I'm really looking forward to your responses in the comment section. So that being said, continue to grind the markets with grit. Manage your risk. For Roy Machingura out.